Hi, today I have the pleasure of talking with Eric Reinhold. He's a certified financial planner, and he is going to talk to us about his recent book that he published, The One Thing, and how to keep your wealth in the market. And Eric, I read your book, I thought it was awesome. And what happened? The biggest drop ever, the quickest drop ever, what happened?
Well, really everybody seems to be focusing on the coronavirus as the impetus for this drop, but it's really three different things. The first way I like to describe it is a double black swan. So in the financial services world, a black swan is referring to something that's an unexpected event that no one knew was going to happen. And what we had first of all, obviously, was the coronavirus. It was over in China. But it was quickly followed up by an oil crisis, which was really Russia and Saudi Arabia both trying to maximize their output, driving prices down. So all of a sudden oil goes down from $40 to $50 a barrel to $20, which in the U.S. you'd think, great thing, my gas is going to be cheaper. Well, it impacts the U.S. in a big way because we produce barrels at about $40, so at $20, companies are going to lose business, go out of business, and so forth. So that was really the second one. The third one that a lot of people aren't focusing on is it's really a credit crisis. There were a lot of highly leveraged hedge funds that all of a sudden, with prices dropping, they're trying to sell. It's putting pressure on bonds to be able to come up, that they're selling good assets out of their funds. And so there was a kind of a log jam on the credit side, which the treasuries tried to backfill by saying, hey, we'll keep funding, we'll support, and they're throwing billions and trillions of dollars towards that issue. So all of those converging together caused this huge drop in the stock market from a high back on February 12th of 29,500, over 10,000 points. And where are we at now with your current portfolio of clients? What type of advice are you giving them, or what have you done for them moving forward during this time? Well, this has been a thing where experience definitely helps. I go back to, I've been through, this is now my fourth, what I would call major bear market. The first one I was actually a senior at the Naval Academy, an economics major there when the 1987 Black Monday fall occurred. But really the one after that was significant. If you remember the dot-com bubble back in 2000. Dot-com, remember that? So the market really was about a 3-year bear market from 2000 to 2002. I had all these nice diversified portfolios, I thought, that were in large cap, mid cap, small cap stocks, international, emerging markets, bonds. And what I found out through that is that everything went down. And so it really gave me kind of a crisis of belief to say, okay, let me reevaluate how I'm doing things. Does my answer to clients want to be just hang in there, it'll come back? Because that was really what everybody was telling their clients. And it seems to be what most people say. Most of my clients or friends that have been impacted through this, they're like saying that their financial advisors are saying, it'll come back, just wait. And I'm like, that doesn't sound like the best strategy, but I'm sure you had a strategy in selling off your clients prior to the fall. Yeah, and part of it is true. I mean, it will come back. If everybody remembers back in the 2008, the most recent one, down to 2009, where the market dropped, stocks came back, but it took 5 to 6 years for your portfolio to return. And so the one issue is, and usually what the media will say is, don't abandon your portfolio at the very, very bottom. And then not get back in. And of course that makes sense. You want to sell low and then wait for it to come back and buy high. So what happened with me is that I am kind of a technical chartist, and so I was looking at the stock market. As you can see on here, I mean, we've risen from 2009. And over the years have come all the way up to where going into 2020, we hit a high of 29,500 on February 12th. Well, about a week and a half later, I'm looking at what we would call the floor, if you're charting, of saying, okay, what's the next level to where if it breaks through that level and doesn't bounce off and go back up, we're going to probably drop to the next level down. And that was about the 28,240 on the Dow level. So on Monday the 24th, the stock market, prior to that, had just been going up and down a couple hundred points, but it dropped over 1,000 points that day. During the day, it hit those levels, and between that and also talking with a number of my clients, the president of Disney Shanghai is a client. His park had already closed. The former president of Disney Cruise Lines is a client. Obviously, the cruise lines were undergoing closure. You also had, I've got a 4-star Army general who was talking to me a lot about what's going on in China.
Wow.
And even the president of Visit Orlando, and all the tourism here and everything that it was going to impact. So with all those things together, between the technicals and talking to some of my clients who are really involved in a lot of these areas that are being impacted, I sold out of all equities in my client accounts, and basically we ended up moving the treasuries. We already had 10% in gold, and we had some tips, and then basically cash to try and get everybody out and positioned on the sideline. And since then, of course, we've seen the market continue to drop and gone down 37% in a 30-day period. So pretty abrupt drop. But unfortunately, my clients are kind of happy to be positioned where they are right now, and not really worrying about things.
Sure. I'm sure your clients love you and probably can't thank you enough, and I'm sure they're referring you to other people in the industry as well to have a second look at potentially their portfolio. I know you don't have a crystal ball, but I'm sure everybody says to you, Eric, where do you see this going, or when do you think we'll have some type of stability?
Right. Oh, I really wish I did have a crystal ball. I mean, part of it is you can go back and look at history and try and say, okay, what is potentially next on the horizon? I mean, each of these drops we've had in the past, the most recent being 2009, the .com, and then prior to that, they've all been based on different things. But where we go from here, typically bear markets, which we're already in one, because once the stock market drops 20%, that's considered a bear market, so we're definitely in that. Typically go through 3 phases. The first one we've gone through, which is the big drop down. So we did that. We did it faster than it's ever occurred. The second phase, though, is typically a bear market rally. So a bear market rally, it could be what we're experiencing yesterday and today in the market. I kind of just jot a little uptick here because we hit a low last Friday of 18,591 on the Dow. So then we've had 2 days now of the stock market going up. It was up big yesterday, it's up today. And typically you'll see kind of a rally where people are buying in, hey, this is a good time to get in. But inevitably what's happened every other time is that happens, it stalls, and then it heads back down to retest the lows, which would be that 18,591. And potentially, I've charted down here, if we look back to 2016, a level where we could potentially hit 16,000 on the Dow. Because in all previous times, that second phase, it's dropped and continued downward. And where we're at now, we haven't even really got into the major impacts in the U.S. All we've experienced is the Fed saying, hey, we're backstopping everything, and the Treasury saying we're sending out checks to everybody and what they're going to do for businesses. But we could potentially be closed down in the U.S. through a minimum of probably Easter, if the president has his way, maybe beyond that. So, so it's hard to gauge, but I would think right now we could potentially just be in a rally. So you have to ask yourself, if you've already taken that, paper loss down to here, do I hang in there, or do I sell this uptick and then move to something more conservative? So that's what I help clients with right now that are potential clients that are coming over for a second opinion, is think through, okay, maybe there's some of your portfolio that makes sense to keep or ride it out, some good companies, but maybe this is a good time to sell on the bounce and capture what you can and reposition that later if we potentially fall a lot further and buy some things down there a lot lower. Because we will come out of this, and my goal with clients has always been, I can't go in and tell somebody that I can get the exact top we're going to sell at and buy at the very, very bottom. But we sold in the top. As it had fallen a little less than 5%, so near the top. If we can buy somewhere near the bottom or dollar cost average somewhere near the bottom, then in the long run, we're going to look great. So.
Awesome, awesome. Well, I really appreciate the time you've given us and the insight. If you have the opportunity, Eric Reinhold, The One Thing, he's a best-known author for this financial book that he has written, and we will give you his information if you want a second opinion on your portfolio and you want to speak with him. He's available for consultations.
All right.
Thank you so much.
Thank you.
All right.